Hello everyone, welcome to past paper discussion sessions for Advanced Taxation exam. I'm your tutor Owais Mirchawala, and in our today's class, we'll be discussing this past exam paper of June 2025 exam attempt. In this series of past paper discussion sessions, we will be discussing almost 7 complete attempt exam papers which are really essential for your finalization phase of exam preparation. See, what most of the students do is that they study the topics and then they do the topical past paper practice only, which is not sufficient for the examination because they have not trained themselves that how they have to deal with all of the topics together in the actual examination. So in this past paper discussion session series, when we will be discussing these 7 complete attempt exam papers, you will give a real insight that how you have to deal with all of the topics together in a time limited situation. Along with these past paper discussion sessions, what we will be doing is that whatever topic will be coming in the exam paper, we will be revising them through my summary notes. These summary notes are a life-changing document in these last few days of your examination, as I have summarized the whole course of advanced taxation in just 57 pages. It's a very good document, like you can refer any topic while you are discussing the past exam paper. All the rules are summarized in a very good manner. Like for example, if you are looking at a past paper and you have to refer 75% group, you just put it in search, you get all the relevant rules. Obviously, this document will not be available in your actual examination, but while you are doing this finalization phase of your preparation, this will help you a lot in remembering the rules. And I always suggest to my students that in these last few days, read this entire summary notes document at least one time a day, daily, so that the rules go on revision. Because that's the most important thing in advanced taxation, that students start to forget the rules and they feel that the things are getting mixed up. So these summary notes are very important. Okay. And this past paper discussion series, summary notes, then my 3 mock exams for my students on which I provide personalized feedback. These all things have been very much successful, and these are one of the important reasons that my students have secured more than 50 nationwide positions. Okay, so let's start with this exam paper. If I just discuss the approach first, we'll be reading this introduction just like you will be reading in your examination. Then we'll be reading all the exhibits, the requirement tab. First, the entire reading, then discussion of the points, and then we will actually draft the whole answer in our today's class. We'll be using this word processor document and spreadsheet document to actually draft the whole answer. Okay, so it will be a detailed class. Your patience and concentration throughout the class will be very important. While we read the question, we discuss the points, so you need to listen to them very carefully. Okay, let's move towards it. Exhibit number 1, Clo and Tyrell. Then we have all the exhibits. Okay, but before moving towards that, let's read the introduction. You should assume that today's date is 1st of August 2025. See, this is just an introduction of the question. Examiner introduce you that, okay, where you are working, who is your client, what is the list of exhibits. Okay, you are an ACCA student working for a firm of accountants. Your manager has asked you to carry out some work in respect of 2 prospective clients, Chloe and her husband, Troy. In addition to some ethical considerations which have been raised by your manager, advice is required in respect of. You all know that in question number 1 of advanced taxation, there will always be a requirement on ethics. And there was a very good document which I have provided to my students, in which I have summarized all the ethical requirements, all the topics together. Just like the summary notes document, there is one more document of ethics. I will open it when we will be discussing this requirement. So just listen with patience. So that ethics requirement will be helping us here. Then determining an individual's tax residence status, chargeable gains realized by a taxpayer whilst overseas. The examiner is just giving you an overview of the question, that what he will be asking in the entire question. The calculation and subsequent taxation of employment benefits, participation in a company share option plan, whether to voluntarily register for the purpose of VAT and tax allowable trading expenses. So apparently it's a lengthy question. Since it's question number 150 marks question, so it's a detailed one, a lot of requirements as reflected in the introduction. Obviously, the detail of all of these things will be coming when we'll be reading all of these exhibits. The following exhibit available on the left hand side of the screen provides information relevant to the question. These are the four exhibits which we will be covering. Clo and Tyrrell, memorandum from the manager. Clo's chargeable gain and income, letter from Clo. Tyrrell's unincorporated business and work to be carried out. So this was a basic intro, like who we are, where we work, the client details, an overview that what the examiner will be expecting from us in this question, and the list of exhibits. Okay, nothing to worry about. Just read with patience. See, it's very important. I always say to my student, how you read the question, how you approach the scenario, that has a very important role in your passing of examination. Whatever you have studied during the entire session, that only holds 50%. The real 50% is how you perform in those 3 hours and 15 minutes, how you deal with the scenario, how carefully you analyze the data. You don't miss out the things, you deal with it confidently. Even if there is any requirement that you don't know well, don't take any stress. You don't pass at 100, you pass at 50 marks. Just do with patience and believe me, you will pass. Okay. Now, the information should be used to answer the question requirement within the response options. As I told, we'll be using these response options while we'll be actually drafting the whole answer. Okay, so our question is Clo and Trial, and this is our exhibit number 1, which we are currently focusing on. Okay, so now let's read this exhibit 1. When you are reading the question for the first time, it's very important that you read it with concentration. Now, extract from a memorandum from your manager dated 1st August 2025. This memorandum records the matters discussed in a conference call with Clo and Tyler. They have been married for many years and are in process of becoming clients of our firm. Clo and Tyrell had always been UK resident. Until 1st July 2023, they left the UK to go traveling. They have been traveling overseas continuously since that date. So they have been resident since their life. Then they left UK residency on 1st July 23. On 1st November 25, they will return to UK and become UK resident again. So from July 23 to November 25. Okay, so apparently if you look at it, they left in the tax year 23-24. Then 24-25 also they were not in UK, and then they are returning to UK in 25-26 because they will return in November 25. So now if I start using my mind, only topic in entire course of advanced taxation when we leave the UK but return within 5 years. That is called as temporary absence period rules. One of the very routine examined requirement. You left UK but you are returning within 5 years. So your absence period is called as temporary absence. Currently it has not been referred in any requirement. We are just reading it carefully. They will stay in UK for the remainder of the tax year such that they will spend 156 days in UK. Now, in tax year 25-26, neither of them will satisfy any of the UK ties prior to 1st November 25. Okay, let's move forward. Clo. On 1st November 25, Clo will commence employment with JDV Limited. JDV Limited is an existing client of our firm. So now there can be an ethical issue that we are already providing tax services to the employer and we'll also be providing services to the employee. So maybe conflict of interest happens, like some information getting disclosed or something. Clo and Tyrell do not own a house in UK. From 1st November 25, they will either rent a property or live in a house which will be provided by Clo by JDV Limited. See the letter from Clo for the information in respect of her asset sales in the tax year 25-26 and her employment contract with JDV Limited. So a lot of data in this question. I would say it's a lengthy question. It's important that you just read with patience. Don't rush. Don't take any stress. Believe me, it's an easy question. Just read with patience. That's the most important thing. On 1st December 25, Tyrell will begin trading as a sole trader. I've received an email from Tyrell setting out his plans in Exhibit 3. Okay, so this basically exhibit tells us about they moving out of UK and then returning to UK. Then close employment situation and title situation. Okay, let's move to exhibit 2. Now, what is he saying here? Let's look at it. Extract from a letter from Chloe dated 1st August 2025. Now, I set out below the information you requested. Asset sales. On 1st October 2024, two paintings, a portrait and a landscape. She purchased two paintings on what date? On 1st October 24. Now, if you remember, when did they left UK? They left UK on 1st July 23 and they will return on 1st November 25. So if you just look at it, these paintings were purchased when Chloe and Tyrell were away from UK. Okay, now I sold the painting on 1st June 25. I could sell the landscape now for 39,000 or wait until 1st May 2026 when I would be able to sell it for 51,000 pounds at a major auction in UK. On 1st July 25, I sold a vintage car for 89,000 pounds. I purchased this car for 54,000 pounds on 1st February 2023 and we used it for our travels. See, apparently if you look at these two paragraphs, it is a clear indication that there will be issues relating to temporary absence and you will have to look at the dates that when they left UK and when they are returning to UK. Okay, so the dates will be very important. We will go in detail when we will be actually drafting the requirement and going in detail of that. So there is nothing to worry about currently, just focus. Employment contract with JDV Limited. My full-time employment contract with JDV Limited is for an initial period of 3 years. So it's an employment contract of more than 12 months. It's a 3-year contract which he has entered. On a salary of 78,000 pounds per year. This employment will be my only source of income. For the initial 3-year period of my employment contract, I can choose whether JDV Limited will provide either two cars, one for me and one for Tyrell, or the use of unfurnished house. So either car benefit or accommodation benefit. Okay. The cars. JDV Limited has informed me that annual taxable employment benefit in respect of the two cars will be 10,400 and 7,800. So the question has been easier in this regard. He gave us the car benefit values directly. We were not required to calculate the car benefit values. Those were provided to us directly. If these cars are not provided to me by JDV Limited, I will lease two cars privately at a total cost of 9,500 pounds per year. The unfurnished house. JDV Limited purchased the house on 1st December 2021 for 1.1 million pounds. JDV Limited informed me that the house has an annual value of 10,000 pounds and will have a market value of 1.48 million on 1st November 25. JDV Limited would charge me a rent of 200 pounds per month. If the house is not provided to me by JDV Limited, I will rent a house on the open market at a cost of 14,000 pounds per year. So, basic accommodation benefit will be calculated here. Here you are already provided with the values of car benefit. So some interesting analysis will be required because we have to decide that whether we have to take the two cars or a house. Nothing to worry, we'll look at it. Then, on 1st May 26, I will become a member of JDV Limited's tax advantaged company share option plan. I will be granted an option to purchase 1,400 shares, less than 1% of the company, at a market value of 17 pounds per share. I will not exercise my options on 1st June 29. I believe that a sale of shares, I will exercise my options on 1st June 29. I believe that sale of shares on the same day will not give rise to chargeable gain. So here CLO is wrong. In relation to CSOP, there is no employment benefit. On the excise rate, there is no employment benefit, but on disposal, there is capital gain tax. If you remember, share option plans, approved share option plans, just go to summary notes, write approved share option plans. Grant date, no tax. Exercise date, no tax. But on disposal date, you have to pay capital gain tax. See, share options approved. I just put in search. Here I go. So these summary notes, as I said, these are not summary notes. Call it, sir, please give your lifesaver document. It's a real lifesaver. Helps you to access all the topics easily. Remember the things, revise the things regularly. Okay, now we'll look in all of these things in detail when we'll be actually drafting the answer and going in detail. Let's read this exhibit number 3 and then we'll look at work to be carried out, which is the requirement tab in reality. Extract from an email from Tyrell, date 1st August 2025. As you know, I will begin trading as a sole trader on 1st December 25. I set out below the information you requested. Value added tax. My maximum annual turnover is budgeted to be £60,000 and I will prepare accounts to 31st March each year. I will have some non-business customers, but most of my sales will be to small businesses. You have already informed me that all of my sales will be standard rated for the purpose of that. But since the taxable supplies are just £60,000, so there won't be any compulsory registration. You can simply go and search registration for VAT. Okay. Value added tax. You go in value added tax and then you can simply go to the small topics in VAT and you can find the registration rules that whenever you have to register for VAT, the threshold for the VAT registration is £90,000 for 12 months. But in this case here, the taxable supplies are only £60,000. You should also be aware that I expect to purchase equipment and to incur other costs during November 25. Calculation of tax adjusted trading profit. Product design. I first designed the product which I am about to start manufacturing in September 19, nearly 5 years ago. At that time, I paid a piece of £5,500 to a design company to draw up the plans, but I did not go ahead with the production. So we can say that this expense was a pre-trading expense. He got the product design, but he didn't went for the business. Now he's starting the business. So this can be regarded as a pre-trading expense, and you all know that pre-trading expenses become allowed expense in your first year of the business. We'll look at it in further detail when we'll be dealing with the relevant requirement. Business promotion. In December 25, I will travel by train to visit 6 potential retail customers in UK. I will explain my product to them, take them out for lunch, entertainment expenses, and give each of them a high quality chef knife which carries a large engraving of my business logo on the plate. I estimate the total cost of this promotional activity will be £1,800. See, you all know that these promotional expenses to attract the customer, you don't call it as marketing, you call it as customer entertainment. So the tax department don't like these customer entertainment expenses because they affect the competition in the market. So in that case, the entertainment expenses are not normally allowed expenses. I would particularly like to discuss 2 matters: registration for the VAT and the tax deductions available in respect of the cost of designing and promoting the business. So now in this, entertainment is a separate thing. The gift you have given, that is a separate thing. So we'll look at all of these things in detail when we'll be exploring this requirement specifically. So we are done with the requirement and all of the 3 exhibits, the introductions and all 3 exhibits. Now let's look at exhibit number 4, which is the heart of the question, because this tells us that what we have to do. Work to be carried out. Extract from an email from your manager dated 1st August 2025. Please carry out the following work. Part A, becoming tax advisors to CLO. CLO and trial will attend meetings with us together and will each have access to all of the advices we provide. Consequently, I can confirm that there is no need for you to consider any possible confidentiality between them. Like they both are open to each other. But send me an email setting out the following: the behavior required for ACCA members in order to comply with the fundamental principle of objectivity and confidentiality. Objectivity means neutral, unbiased behavior free from any pressure. Confidentiality ensure that you do not disclose the client confidential information, even during the engagement and even after the engagement also. In relation to becoming tax advisors to CLO, any potential threats to the fundamental principles of objectivity and confidentiality, and the safeguards we should put in place. Now, if you remember, for CLO, there was a problem. For CLO, there was a problem, and that problem was that CLO will become a tax client of our firm, and CLO will commence employment with JDV Limited, and JDV Limited is an existing client of our firm. That's the problem. The employer is already our client, and now we are onboarding the employee CLO also. So now think about objectivity. See, there can be situations when one thing is tax favorable for CLO, but not favorable for JDV Limited. See, when you say that, okay, the cost for CLO will be lower, so at the same time, the cost for JDV Limited will be higher. If I give you two options, option 1, option 2, compare them. Okay, like the car and accommodation thing. So now you compare. When you say that, okay, for example, car will bring lower cost for CLO. So maybe at the same time, that car option will bring greater cost for JDV Limited. So there will be issues of conflict of interest. Our objectivity may get compromised. And whenever this happens, we have to give a proper disclosure to the clients. We have to ensure that we use separate teams. Similarly, confidentiality issues will also arise because we will have access to the confidential data of both of the clients. So maybe there are situations when confidential information get disclosed from one client to another, and for that also it's very much necessary that we use separate teams, what we call as a Chinese wall, separate teams who don't interfere in each other work, so that objectivity and confidentiality issues do not arise. Okay, so that's a 5 marks requirement in relation to ethics. Okay, let's look at it, and let me show you my ethics document also, which we have already discussed during our course discussion. Okay, let's look at it. Okay, so in my notes of ethics, which we have already discussed in the classes also, we have discussed all of these fundamental principles also, like objectivity, confidentiality, which he asked here. Okay, you have all the fundamental principles. Then you have some routine requirements, which he asks normally, like using knowledge obtained from one client to another, unknown refund situations, factors to consider before accepting engagement, errors in previous return. Then some important concepts to remember, like conflict of interest is getting involved in this question because we will be advising the employer and the employee both. Then the fundamental principles, disclosure of issues, money laundering matters. So some of the routine requirements which the examiner normally asks in ethics at advanced taxation level. So this is again a very good document which I provided to my students. Okay. So now let's go to the scenario of the question and deal with the first requirement. Since the requirement is just that we have to respond to the instructions in email from your manager. Today's date is 1st August 25. The split is shown in exhibit 4, that is of 40 marks. Okay. 5 plus 4, 9, then 8 marks, then 11, 7 and 5 marks. So that brings the total to 40 only. So what about the remaining 10 marks? So you all know that in question number 1, there are 10 marks for professional skills. Okay. These 10 marks are in addition. You get 10 extra marks if you attempt your 40 marks in a professional manner. Now, what do you mean by this? See, you only have to attempt requirements of 40 marks in question number 1. 10 marks is an additional gift because examiner says that don't attempt 50 marks, just attempt 40 marks. But while answering, ensure the professional skills like do proper communication, make the format of an email, format of notes of the meeting, give headings, subheadings, use proper communication, analyze the rules of taxation in proper manner, like detailed analysis of the rules that how they relate. Evaluate the scenario, like wherever you have to take the decision, advice, evaluate from all perspectives. Skepticism, wherever the data is incomplete or you want to challenge any assumption. And the commercial acumen, a business sense, a practical approach. We have again had a complete class on professional skill marks also. Okay. In every requirement, you don't have to apply all the skills. You just need to do your exam in a proper manner. These professional skills will automatically be covered in your discussion. Okay. So what we have to do is that we have to respond to the instructions given by the email from our manager. Okay. So now the question is Chloe and Tyler, which we are dealing with. I want you all to listen to me carefully. Now we are looking at the requirement number 1, which is becoming a tax advisor to Chloe. So let's copy this requirement, okay, which you are dealing currently, becoming a tax advisor to Chloe, which we are currently dealing with. Now it's a 5 marks requirement. Now in this requirement, he has stated that send me an email. So we have to send him an email in which we have to discuss the behaviors required of ACCA member in order to comply with the fundamental principles of objectivity and confidentiality. We have to explain that. And what are the potential threats in relation to objectivity and confidentiality and the safeguards which should be put in place. Okay. So now we are writing an email to manager. So now when we are writing an email to manager, it's always easy to text manager. Okay. Normally we are a tax supervisor or a tax senior. You can find that here. You are an ACCA student working for a firm of accountants. Your manager has asked you to carry out the works. Now, obviously, you won't write ACCA student or your own name. Rather, you will write tax senior or tax supervisor. Okay. Now, the client is Chloe ethical issues. Client is Chloe. Subject is ethical issues in relation to acceptance of close engagement. Okay, and the date is multiple time it was written that you should assume that the today's date is 1st August 25. Just listen to me carefully and you will be able to understand the things in a better manner. See, in this first requirement, we have to discuss the issues while we are accepting the tax advisory to Chloe, and we have to send an email to the manager in relation to it. The behavior required of ACCA members in order to comply with the fundamental principles of objectivity, and then the fundamental principles of confidentiality. And then we have to discuss any potential threats or safeguards which can be deployed in this situation while we are dealing with this engagement of Chloe, since we already have its employer JDV Limited as our client. Okay, so now in the first requirement, we have to think about this fundamental principle of objectivity. Fundamental principle of objectivity. Then we have to talk about fundamental principle of confidentiality. Just listen to me carefully. And then potential threats and safeguards. Okay, so this was the basic he asked us. Listen to me carefully, you will be able to understand in a better manner. We had to form an email for the manager. We made that basic format. Okay, now we have to talk on fundamental principle of objectivity and confidentiality. And then we have to discuss the potential threats and safeguards. Okay, if we accept the work of close, since GDV Limited is our existing client. Okay, so now very basic question, fundamental principle of objectivity. Objectivity requires that professional accountants should act in an unbiased and neutral way when dealing with their clients. They should not be under any undue influence or situations of conflict of interest which may affect their objective or unbiased judgment. Okay, objectivity means to be neutral, objective, neutral, unbiased. Okay, so first we had to explain this fundamental principle of objectivity and confidentiality. In these ethics notes also it's available here, that what is objectivity, biased and unbiased and neutral in your dealing. Okay, your judgment shouldn't be compromised, and confidentiality, that you should not be disclosing any information about the client. Okay, so the behavior required of ACCA members in order to comply with fundamental principles of objectivity and confidentiality. Confidentiality requires ACCA members to ensure that while dealing with any client, they do not disclose any client specific confidential information to others without explicit permission of the client, or when it is permitted by the law. Because there are situations when you can breach confidentiality, but in a normal situation, breaching confidentiality is not required. So what objectivity requires and what confidentiality requires. Okay, now comes the potential threats and safeguards which may arise if we accept the work of CLO. Okay, and these potential threats and safeguards from the perspective of objectivity and confidentiality. Okay, so potential threats and safeguards, first in relation to objectivity and then in relation to confidentiality. If our firm will accept engagement of CLO, then concerns on objectivity may arise, as our firm is also dealing with CLO's employer JDV Limited as its tax advisor. Okay, there may be situations when conflict of interest may arise and our firm may not be able to maintain its objectivity. Okay, situations when an advice is favorable to CLO but not favorable to JDV Limited may create situations of conflict of interest. And when there is conflict of interest, issue arises in maintaining your objectivity. Okay, you have to maintain your neutral behavior, unbiased. Okay, so this issue of objectivity can arise. What can be the potential safeguard? See, you have only 5 marks, so make sure that you don't do overwriting. 1, 2, 3. Now you will add one safeguard, then you will add a comment on confidentiality, and your answer will be done. Okay, in order to deal with issue of objectivity, our firm should first disclose to both clients about this potential threat. First of all, be transparent. Secondly, our firm should use separate teams for CLO and for JDV Limited in order to ensure that conflict of interest do not arise within a team itself. Okay, when there will be separate teams, so they will be working separately and they will be able to work in a neutral manner, in an unbiased manner. They won't be able to know that, okay, what other team is advising. You both will be working separately. Okay, and then in relation to confidentiality, okay, again, if our firm will accept Clo as a tax client, then our firm will have access to confidential data, will have access of confidential data of both of its clients, Clo and JDV Limited. Since Clo and JDV Limited are in employer and employee relation, their interests may conflict and situations may arise when confidentiality breach may happen when advising one of the client. See, that is very important. Like, let me give you an example. For example, you're sitting in front of JDV Limited. They said that, okay, we are thinking that, okay, we provide this to Clo or we restrict this thing of Clo. And they must be thinking that, okay, what will be the impact on Clo or what Clo will feel. And you are sitting as a tax advisor and you said, okay, I know about the personal issues of Clo. This will impact in this way. So now you are using some privileged information of Clo and you disclosed it to JDV Limited. Similarly, when you are talking to Clo, and she must be thinking that, okay, should I bargain this from JDV Limited? Should I ask them this? What they will think, maybe I don't know. But you as a tax advisor, since you are dealing both of the clients, oh, don't worry. I know JDV Limited has the funds. I know JDV Limited has this thing. I know JDV Limited is thinking in that manner. One issue was conflict of interest. Now you will be disclosing the information. You will be breaching the confidentiality. Okay, in order to deal with issue of confidentiality, separate teams with strict controls can be effective in order to ensure that confidential information of one client do not passes to another. Okay, strict Chinese wall, what we call as. So if you look at it, it was a 5 marks requirement. Email to manager, to tax manager, from tax senior or supervisor, whatever you write, client, ethical issues, date. Now, fundamental principle of objectivity that you had to explain first, then fundamental principle of confidentiality. Then comes the potential threats and safeguards. Okay, in relation to objectivity, and then potential threats and safeguards in relation to confidentiality. Okay, first in relation to objectivity and then in relation to confidentiality. See, it's very important. Listen to me. How you approach the requirement. It was a 5 marks requirement. We broke it down. Explain objectivity, explain confidentiality as he asked, the behavior required. Then issues for objectivity, issues for confidentiality, and the safeguards. So, 5 marks. 1, 2, 3, 4, 5, and 6. Sir, you attempted 6 marks. There is no negative marking. If you have time and you write an extra comment, that's acceptable. Let, for example, if any of your comment is not up to the mark, the examiner will read the extra comment and he will give you a covering mark. It will cover your bad comment in some area. But within that same requirement only. It can't be like that, okay, part A covering part B. No. Within part A, for example, if your first 5 points were not covering 5 marks, the examiner will also read this and he will also consider this in marking. There is no negative marking in writing extra point, always remember. Okay, so it was an easy requirement relating to ethics, and I believe that it wasn't a difficult one. Now, let's move forward. Work to be carried out. Part B, close personal tax affairs. Okay, I will copy it and then we will paste it here. Let's look at it. I want you all to listen to me carefully as we deal with each of the requirement. The first is done. Now, the close personal tax affairs. Let's look at it. Prepare notes. See, in earlier requirement, it was email. We prepared an email. Now we have to prepare notes for the meeting. Okay. So now we are preparing notes for the meeting. Now, when we prepare notes for the meeting, so you write to the client files. Okay, because notes for the meetings become part of the client files. From tax supervisor or senior. Okay, date 1st August. 1st August it was. Yes, 1st August 2025. Client, close, subject, close, personal tax affairs. Okay, these are very easy formats, like you follow the same always, to, from, date, client and subject. Okay, and the examiner is not very much strict on it, so don't take too much stress that sir on ChatGPT I found that format of note, that format of memorandum. See, these are internal communication documents and multiple formats are acceptable. Okay, even if you want, you pick up 10 past papers, compare the format of notes, in every of them there will be a different format. So be relaxed, don't take a lot of stress in this. Now, part 1, tax residence. This is the part 1 which we are dealing. So we copy and we paste it here. Tax residence. Let's look at it. Now, I can confirm that Claude does not satisfy any of the automatic non-residence test or the automatic UK residence test in relation to her only home being in UK. With that in mind, explain why Chloe will become UK resident on 1st November 25. Okay, so the question has told that automatic non-residency is not applying. And within automatic residency, the home thing is not applying. The point of home is not applying. So now if you go to individual overseas issues and you write determination of residency, automatic non-residency is not applying. The examiner made it clear. Read the instructions. Automatic non-residency is not applying. In automatic residency, this home point is not applying. So you have to think about these two. Lived for at least 183 days, worked for at least 365 days in UK, such that some days lie in current tax year. Now, what do you mean by this? This refers to a situation when you have come to UK for an employment contract which is of more than 1 year. When you have come to UK for an employment contract which is of more than 1 year and you've started work during the current tax year. You've started working, worked. This word is very important. Worked for at least 365 days. So some days lie in the current tax year. So this refers to a continuing situation. Like for example, if I look at the situation of Chloe, she will come to UK, okay, on 1st November 25. She will spend 156 days in UK. And if you remember her employment contract, we read here, her employment contract was of 3 years. So this means that her work situation will be of more than 365 days. Maybe in the current tax year only she hasn't worked 365. Some days lie in current tax year. So this refers the continuing situation. Starting from the tax year, she is continuing to work. And one more thing is relevant is that she has arrived to UK on a permanent employment contract, a full-time employment contract. So if you remember the rules of split year basis, when an individual arrives to UK with a permanent intention and acquire a home or a permanent job of at least 1 year, split year rule gets applicable. And when split year rule get applicable, you become resident from the date you arrive. You have studied these things during your course lectures. Split year changes your residency status immediately. Okay. And when you arrive with an intention of permanent job for at least 1 year, so you become resident. Here his employment situation is of 3 years. She has joined for a 3 years employment contract. Okay. So now what he is asking us is, in the work to be carried out. Explain why Chloe will become resident on 1st November 25 for 4 months. Okay, so now, first of all, automatic UK residency requirement of 183 days of living, 183 days in UK in a tax year will not be satisfied for Chloe in tax year 2026-27, because I believe she was coming on what date? On November 25. Okay, she came on November 25, so it's 25-26. November 25 is the tax year of 25-26, because now the tax year will end on 31st March 26. November 25 is in tax year of 25-26. So automatic UK residency requirement of living 183 days in UK in a tax year will not be satisfied for Chloe in tax year 25-26. However, another requirement of 365 days residency in UK such that some days lie in current tax year and an individual has arrived due to work situation. Okay, Chloe has arrived in UK and has joined a 3 years employment contract, and 156 days lie in current tax year, of 2025-26. She will be considered as automatic UK resident under this requirement. Sir, can you repeat it? Yes, I will repeat it. There is nothing to worry. Sir, how did you decide that you have to write these comments? We can't decide it in the exam. Okay, let's see. The question said, not apply automatic non-residency. I said, okay. Automatic non-residency, cross, cut it down. Don't apply it. The question said it. And in automatic UK residency, okay, I can confirm that Chloe does not satisfy automatic non-residency, and again, it does not satisfy automatic UK residence test in relation to her home point. So this was the third point of home. Ignore that also. So this means you have to use this 183 days or this. Live for 183 days in UK. That do not apply because Chloe will live for how many days? Chloe will live for 156 days. So that is less than 183. Then work for at least 365 days. Work means your employment situation at least 365 days in UK. Such that some days lie in current tax year. Now look at some days. However, another requirement of 365 days residency in UK is such that some days lies in current tax year and an individual has arrived due to work situation. Chloe has arrived in UK. It has joined a 3-year employment contract and 156 days lie in tax year 25-26, because we are talking about November 25. Do remember, November 25 is 25-26. She will be considered as automatic UK resident under this requirement. Further, Chloe will also be subject, since it's a 4 marks requirement, so you have to go step by step, will also be subject to split year rules in tax year 2025-26. One quick question. Sir, why didn't you refer the tax ties? See, the step of tax tie applies when a person is neither automatically non-resident nor automatically UK resident. But Chloe is automatically UK resident, we have stated here. Automatic non-residency was not applying, the question stated. In automatic residency, the home point is not applying, the question stated. So for automatic residency, we referred the 183 days point, we referred the 365 days point. Anyone has to be satisfied. So under 365 days point, she has become automatic UK resident. Now we are moving forward for the split year basis. Further, Chloe will also be subject to split year rules in the tax year 2025-26. She has arrived to UK on 1st November 2025 and joined a full-time employment under a 3 years contract. Okay, under a 3 years contract, this satisfies split year requirement of employment of at least 12 months. Okay, under split year rules, Chloe will become UK resident from the date she arrived to UK. That is from 1st November 2025. When split year rules get applicable, your residency status is not for the whole year then. Then residency is from the date you arrive to UK, you come to UK. The residency is from the date you come to UK. Okay, if you remember the split year rules, okay, you arrive for a permanent job of at least 1 year. These all are the different situations. So you become a resident from the day you come to UK. Okay, so she will become a resident from the date she arrived in UK, and that is 1st November 2025. That is what we call split, breaking the year. Things before 1st November 25, non-resident. Things after 1st November 25, you become a resident. Now, you will not be considered for the whole year. You will be considered split year. How many marks requirement was it? 4 marks. It's done. The question said, don't refer automatic non-residency. I said, okay. For automatic residency, don't refer the home thing because it is not satisfied. Okay. So within automatic residency, there was 183 days, there was 365 days. Then the concept of split year basis, because she was coming for permanent employment. And then the final decision. Okay. I believe it wasn't a difficult one. It was all about remembering the rules. And obviously, the clear understanding how you have to apply them. Okay. Now, let's move forward. Part 2, that is in relation to chargeable gain. Let's look at it. I want you all to listen to me carefully. So now we are progressing in our question, and now we are looking at this requirement of chargeable gain. Let's read it, that what the examiner is saying here. Okay, so now let's read about this chargeable gain thing. When carrying out this work, you should ignore the possibility of close gain being subject to tax overseas. So you have to assume that there is no overseas tax, so there won't be anything about double taxation relief. Let's move forward. Explain whether or not the gains made by Chloe on the sale of portrait painting and the vintage car will be subject to UK CGT. Okay, we'll look at it. Explain with supporting calculation whether Chloe should sell the landscape painting now for £39,000 or should wait until 1st May 26 when she will be living in UK and will be able to sell it for £51,000. You should assume that Chloe wishes to maximize her post-tax proceed and that she will be a basic rate taxpayer in the tax year 25-26 and a higher rate taxpayer in the tax year 26-27 for 8 marks. It's an easy requirement. Just listen to me with patience. Now, if you go and look at this capital asset thing, on 1st October 24, I purchased 2 paintings, portrait and a landscape. I sold the portrait on 1st June 25 for 45,000. I could sell the landscape now for 39,000 or wait until 1st May 26 when I would expect to be able to sell it for 51,000 pounds at a major auction in UK. On 1st July 25, I sold a vintage car for 89,000. I purchased this car for 54,000 pounds on 1st February 23 and we used it in our travel. Now, the first thing which you need to understand here is that you need to talk about the Chloe's temporary absence. Chloe has always been resident in UK, which means that she was resident for at least 4 years. For the temporary absence rules, anyone who has been resident for at least 4 years out of last 7 years, okay, because she had been always resident, and then you leave the UK for less than 5-year period. She is leaving UK on 1st July 23 and she will be returning on 1st November 25. So that's a period of less than 5 years. So her absence will be regarded as temporary absence. First of all, establish this thing. That's very much important. If you don't remember the rules of temporary absence, you can just go and search them. Temporary absence rules. Okay, here you go. If temporary absence period rules get applicable, then CGT will arise on assets which were purchased before leaving but were sold in non-residency period when you return. Okay, because the period of temporary absence, like you sold anything during non-residency period when you were temporarily absent, so you'll have to pay tax on them when you return to UK. Okay, that non-residency period gain becomes chargeable. Now, an individual is considered as temporarily resident if the two conditions are satisfied. You were resident for at least 4 years and then you leave the UK residency but return within 5 years. Okay, so first of all, let's talk about the close temporary absence. Okay, close absence from UK will be regarded as temporary absence period as she was UK resident for more than 4 years out of last 7 years before leaving UK residency. Before leaving UK residency on what date? Before leaving UK residency on 1st July 23. On 1st July 2023, as she has always lived in UK before it. Okay. Further, she will regain her UK residency within 5 years of leaving it on 1st July 2023 as she plans to return on 1st November 2025. Just listen to the things carefully and you will be able to understand it. She moved out of UK on 1st July 23 and on 1st November 25 she will return to UK. So the absence is of less than 5 years. First, before leaving residency, you lived for 4 years and then you went. And then you went away, your non-residency period was less than 5 years. Due to temporary absence period rules, any disposal of assets made by CLO during non-residency period of assets which she purchased when she was originally resident will be subject to UK tax in the tax year when she regains UK residency. See, let me repeat the things again also. You have to be very much careful while writing the answer. Don't write a lot. Make it very specific. Use the words clearly. Close absence from UK will be regarded as temporary absence as she was UK resident for more than 4 years out of last 7 years before leaving UK residency. As she has lived in UK before it. Always she have been in UK. It was written in the scenario. Okay. Then she will be regaining UK residency within 5 years of leaving it on 1st July 23 as she plans to return on 1st November 25. Okay. So, if you look at it, we developed a simple paragraph. Due to temporary absence period rule, any disposals made by CLO during non-residency period of assets which she purchased when she was originally resident. Your residency period assets sold in non-residency will have to pay tax on them when you regain the residency. Okay. Now let's look at each of the assets. On 1st October 24, she purchased 2 paintings, a portrait and a landscape. Portrait is purchased on October 24 and sold on 1st June 25. Let's comment on portrait. Portrait painting was purchased on what date? Look at it. Was purchased on 1st October 24 and was sold on 1st June 25. Was purchased on 1st October 2024 and it was sold on 1st June 2025. Both of these dates lie in non-residency period. Listen to me very carefully. She left UK residency on 1st July 23. Please listen. She left UK on 1st July 23. It was purchased on October 24. She sold it on 1st June 25, whereas she is returning on 1st November 25. So purchase and sale both was done in non-residency. As purchase and sale both was done in non-UK residency period, therefore it will not be subject to UK tax. Even temporary absence rules will also not make it subject to UK tax because it was not purchased when she was originally resident. It was purchased and sold both in non-residency period. If you remember the summary notes, you can know CGT on assets which were purchased and sold both in non-residency period. So if you look at the purchase and sale date of this painting, it was purchased and sold both in non-residency period. Now, then for the landscape, you have to do some planning. So I will go for the landscape in the second phase. Let me deal with this car thing. For car, a very simple comment. Cars are exempt from UK tax. Car is exempt from UK tax. If you remember, just go and search a vehicle or a car and you will find following assets are exempt from CGT vehicles. Okay, there will be no UK tax on disposal of vintage car as vehicles are exempt from UK CGT rules. Okay, no need to comment on its date or anything. No need to comment on that because see, it was purchased in February 23. It was purchased in February 23, whereas we left UK in July 23. So it was purchased when we were resident. But cars are exempt asset from CGT. So there is no need to go in that debate. Now let's talk about the landscape painting. It was purchased on October 24. Along with everything, I purchased 2 paintings. Landscape painting was purchased on 1st October 24 when Chloe was non-UK resident. Okay, it was purchased on non-UK residency. And its first planned disposal date, I could sell it on 1st August 25. On 1st August 25, she is non-resident. Okay. One planned disposal date of it is 1st August 2025 when Chloe is still non-UK resident. In this case, there will be no UK CGT on it as both purchase and sale lie in non-UK residency period. It was purchased on 1st October 24 along with this portrait. It's clearly written. Purchased 2 paintings. First disposal date is 1st August 25. Now 1st August 25, she is coming on November 25 and due to split year rule, she will become resident from November 25 only. She will become resident from November 25 only. Okay, so on August 25, it's August 25. Yes, on August 25, she will be non-resident. So purchase and sale, purchase in October 25, non-resident because it's after July 23. Sale on August 25, that's before November 25. So there will be no UK CGT on it. In this case, her post-tax proceed will be £39,000, whatever she is getting because there is no tax on it. I will copy the pound sign from here and I will paste it here. Every time when I will need it, I will just use Control V to paste. Otherwise, you can add from symbol here also. You can use Control C and Control V tool. Sometimes they work in examination, but sometimes student complain that copy paste function was not working. So in that case, you will use this symbol function. But if you don't have time in examination, you can ignore the currency sign, that's acceptable. So, landscape painting was purchased on 1st October 24 when Chloe was non-resident. One planned disposal date of it is August 25 when Chloe is still non-resident because she will be returning in November. In this case, there will be no tax. So, complete proceed will be post-tax. There is no tax on it. However, if sale of landscape painting is delayed up till May 26, that is the second date which is written here, is delayed up till May 26. So now Chloe will be UK resident because Chloe will become UK resident on November 25. Is delayed up till May 26, then its sale will lie in a period when Chloe is a UK resident. Okay, Chloe is UK resident since 1st November 2025. In this case, UK CGT will be payable on sale of landscape painting in tax year 2026-27 as sale date is May 2026. Because since now it is not sold in non-residency period, it is being sold when actually you are resident. So once you become resident, you have to pay normal tax. Once you become resident, you have to pay normal tax. Okay, now what will be the tax on it? She is selling it for 51,000. The cost is 24,000. Now let's look at it. UK CGT on it will be, okay, if you want, you can do these calculations in spreadsheet, or if you want, you can simply use the table tool here. I prefer using table tool because I feel that whole answer solved on single screen is better. Otherwise, if someone solves it on spreadsheet, that is acceptable. He will simply write UK CGT will be this, refer spreadsheet. Okay. So now disposal proceed. In this case, the disposal proceed is 51,000 pounds if I am not wrong. Yes. The cost of landscape was 24,000. 51 minus cost 24,000 pounds. You get the chargeable gain. 51 minus 24. So that is 27,000 pounds. You will deduct the annual exemption of CGT. That is 3,000 pounds. That gives you the taxable gain, 24,000 pounds. So now you will get your UK CGT, 24,000 pounds multiplied by. In the work to be carried out, he said that in 26-27, it will be sold in May 26. May 26 is 26-27. He will be a higher rate taxpayer. So for higher rate taxpayer, the rate of CGT is 20%. That gives us 4,800. Sir, will you repeat it again? Yes, I always repeat. So there is nothing to worry. Just listen to me carefully. Okay. I like doing good formatting. If you don't like it, that's also acceptable. So post-tax proceed in this case will be 51,000 pounds minus the tax of 4,800. Post-tax proceed, please don't deduct cost from it. Proceed is 51 and the tax 4,800. So your post-tax proceed will be 46,200 pounds. Okay, so for landscape painting, sale on 1st May 2026 will generate greater post-tax proceed. Therefore, it is better to delay its sale. Okay. Sir, can you please repeat it again? Yes, I will repeat it, and I believe that it's very easy. First of all, we commented on the close residency and absence issues. that close absence from UK will be regarded as temporary absence because he's leaving UK, she's leaving UK from 1st July 23 to November 25. That's a less than 5-year period. So the absence will be regarded as temporary absence. Then we commented on the portrait painting, purchase and sale, both in non-residency. Vehicle is exempt asset, so no need to go in useless debate. Okay, that it was purchased in residency, sold in non-residency, it should be subject to temporary absence rule. But then suddenly you will find, oh, car is exempt. So why to go in that debate? Just it's an exempt asset. For landscape painting, you commented on that. Okay. If you sell it in non-residency period, and since purchase was also in non-residency, so it will be exempt. If the purchase would be from residency period, then in that case the tax would arise. Okay. Then in May 26, you will be a normal UK resident. You will pay normal tax on it. So I believe that it was an easy one. Again, till now, there are a lot of requirements in this question, but other than that, this question is not difficult. It's like doing the basic things. Now let's look at the part 3, which is employment contract. Done? Let's read this part for the employment contract and develop the answer for it. Okay, let's look at it. Okay, so let's read this task 3. When carrying out this task 3, you should note that clause annual income tax liability in respect of her salary is 18,632 pounds, and you should ignore national insurance contributions. In order to assist Chloe in deciding which of the two alternative benefits to choose. If you remember, Chloe had two options. One, to take cars from JDV Limited, and another was to take accommodation. Calculate the financial cost for Chloe of each of the benefits for a complete tax year and conclude on the findings. So in this task 3, first of all, we have to discuss and we have to help Chloe decide that which of the two alternative benefits, cars or house, will give a lower tax cost. Then in the same requirement, we have to talk about the company share option plan thing also. I'm not reading this part currently. Let's do this much first and then we'll read about this company share option plan. That's a completely separate debate and a very easy one. Now, if you remember the exhibit number 2, when there was details about the employment contract with JDV Limited, let's read it again. We have already read this exhibit, but now we are referring it again because we have to solve it. This asset sale thing has already been done. Now, my full-time employment contract with JDV Limited is for an initial period of 3 years on a salary of 78,000 pounds per year. This employment will be my only source of income. For the initial 3-year period of my employment contract, I can choose whether JDV Limited will provide either 2 cars, one for me and one for Tyler. Here you need to understand one thing. JDV Limited is providing these 2 cars to Chloe because of her employment. So both of these cars will be taxable on Chloe only. Now whether Chloe uses it for her own self, give it to Tyler, give it to friend or whatever it is, it will be taxable on Chloe only. Like for example, even you are getting this salary, you gift it to your friends, then also you'll have to pay tax yourself. So one option is that Chloe take these 2 cars. So obviously the car benefit will give rise to income tax. Or the use of an unfurnished house, what we call as accommodation benefit. The cars. JDV Limited has informed me that the annual taxable employment benefit in respect of the 2 cars would be 10,400 and 7,800. For me, my car and Tyrell car, it's irrelevant because whoever is using the car, that's not relevant. It will be chargeable benefit on Chloe only because she is being given with these 2 cars. Now, if she go away to Tyrell or Mr. A or Mr. B, whatever it is, that do not create any concern. If these cars are not provided to me by JDV Limited, I will lease 2 cars at a total cost of 9,500 pounds per year. Now we are already provided with the car benefit values. You are not required to calculate the benefit again. Okay, now the unfurnished house. JDV Limited purchased this house on 1st December 21 for 1.1 million pounds. JDV Limited informed me that the house has an annual value. Annual value means the market rent of 10,000 pounds and will have a market value of 1.48 million on 1st November 25. JDV Limited would charge me a rent of 200 pounds per month. Even they will be providing the house and still they will be charging us on sub rent. If this house is not provided to me by JDV Limited, I will rent a house on the open market at a cost of 14,000 pounds per year. Now this note 3 is for company share option plan, which we are not dealing currently. We are dealing with this two alternative thing. Okay. Now what was the requirement? Calculate the financial cost for CLO of each of the benefits for a complete tax year. So we have to compare the financial cost. Now let's look at it. I want you all to listen to me carefully. Believe me, it's easy, but you need to understand it. Financial cost for CLO under each of the alternative. This is what we need to determine. If CLO accepts cars from JDV Limited, then what will happen? And if CLO accepts unfurnished house from JDV Limited. See, this is what we call as a tax planning type question, where you have to involve yourself in the scenario. Now, whatever CLO is accepting, there will be income tax on benefit. There will be income tax on the benefit which will be arising, which CLO will have to consider. Whatever you accept, you will have to pay the income tax on the benefit. We will calculate it. So I've just kept that slot empty because income tax will arise whatever benefit you accept. That is irrespective you take car or you take the house, whatever it is, it will be a taxable benefit and income tax will be payable on it. Now you have to use your mind. See, if CLO will accept the cars, you have to think about the financial cost, the overall cost. See, if CLO will accept the cars, then in that case, CLO will have to take the house on rent because you have to select any one thing. If she will accept car, she will have to take the house from the open market and that will cost her 14,000 pounds per year. So now what you can say is rental cost of house for CLO. See, if CLO will accept cars, listen to me, if CLO will accept cars, she will not sleep in those cars. She will not she will need a house. So she will take the house on rent and that will cost her 14,000 pounds. But if she accept the house from JDV Limited, in that case, she will just have to pay 200 pounds per month to JDV Limited. So in that case, her rental cost will be 200 pounds into 12 months. Okay. So that will give you how many pounds? That will give you 2,400 pounds. 12 months into 200. I believe it's 2,400 pounds. See, if she will accept the cars, she will have to rent a complete house and that will cost 14,000 pounds. If she will accept the house, then a rental cost will be 2,400 pounds only. Okay. Now, rental cost of cars. See, I know that some of you guys might have questions in your mind, but your patience is very necessary. If she will accept the cars from JDV Limited, in that case, there will be no rental cost of cars because she is not required to pay anything. But if she will not take the cars, then she will have to lease cars on her own and that will cost 9,500 pounds to her. Now that will give us total cost for CLO under each alternative. That is what we have to arrive at and that will be our final answer. Okay. Sir, can you please repeat it again? We are making an analysis. Financial cost under each of the alternative. Income tax on benefit that we have to calculate. Rental cost of house for CLO. See, if CLO will accept cars from JDV Limited, then she will have to pay rental cost of house as then she will rent house from open market. Okay. However, if she will accept house from JDV Limited, then she will have to pay reduced rent of £200 per month to JDV Limited as stated in the proposal from JDV Limited. Sir, can you please repeat it again? Yes, I will repeat. But you need to listen to me with patience and you are required that you don't rush. Okay. See, if Chloe will accept cars, then she will not sleep in cars. She will take the house on rent. Okay, so that will cost her complete £14,000. That will cost her complete £14,000 per year. Are you getting my point? But if she will take the house from JDV Limited, then she will have to pay rent to JDV Limited, and that was a reduced rent. In contrast, if Chloe will accept house from JDV Limited, then she will have to pay a rental cost for cars, and that will cost her £9,500. Okay, so if you accept cars, you have to pay 14,000 for the house. If you accept house, you will still have to pay 2,400 for the house, and you will have to pay 9,500 for the cars. I believe that you guys are getting it. I have repeated it multiple times and attempted that you can understand it in a better way. Now let's come to working one, which is the main thing of this part. The main aspect, income tax on the benefit. Whatever alternative Chloe will accept, it will have income tax implication, as both of them are chargeable non-cash benefits. Okay. Whatever alternative you accept, there will be income tax implication on it, and that's very much logical. Okay. Now income tax implications will be, let's do that. Okay. Now let's start doing the working. For that, I want you all to listen to me very carefully while we do that working. Now, so if cars are accepted, then what will happen? If house is accepted, then what will happen? In any case, there is existing salary of Chloe that will remain intact irrespective of whatever she accepts. And that salary is £78,000 per year. Now for these workings, if you're not comfortable on the word processor, you can always use the spreadsheet for that. You just need to give a reference that calculation done in spreadsheet. It's the same thing. I prefer word processor so that whole answer is solved on a single screen, but that's completely your choice. Existing salary of Chloe will remain £78,000 in both of the situations. Okay. Now car benefit. Car benefit was provided in the question ready-made. 10,400 and 7,800. 10,400 and 7,800. That was ready-made available in the question. So that is 18,200. In this case, there will be no car benefit because she has not accepted the cars. Accommodation benefit. In this case, there will be no accommodation benefit, but here the accommodation benefit will arise. But for accommodation benefit, you will have to calculate the accommodation benefit. Accommodation benefit, you will have to calculate. The reason being is that he has not provided you the taxable value directly. You will have to pick up the basic charge, that is the annual value. Then you will have to calculate additional charge on the cost of the house. You will not use market value because the gap is of less than 6 years. If you don't remember the rules of accommodation benefit, just go and search this accommodation benefit and you can find it. The rules of accommodation benefit. Here you go. Basic charge is higher of actual rent and annual value. The house is purchased, so there is no actual rent. There is annual value only. Additional charge, cost plus improvements minus 75,000 into 2.25%. Okay. This is on cost only. Market value is used when the gap is of more than 6 years. But here that do not apply. So, for the accommodation benefit, you will make working 2. Just listen to me carefully. Working 2. Accommodation benefit will be number 1, basic charge of basic charge equal to annual value of the house. Since there is no actual rent, the house is purchased, so there will be no actual rent. So basic value of the house, annual value of the house is 10,000 pounds equals 10,000 pounds. As house is purchased by employer, so there is no actual rent paid by employer. Then additional charge of how much? The cost of the house is 1.1 million pounds. You will not use market value because gap is of less than 6 years. 1.1 million pounds, there is no improvement element, minus 75,000, so that will be 1025,000 and it is 2.25%. 1025,000 into 2.25%. So that is 23,062. Okay. So total accommodation benefit. Total accommodation benefit will be 10,000 pounds plus 23,062 minus rent or usage contribution paid by CLO of 200 pounds per month, which will be 2,400 pounds for a year. Okay, accommodation benefit will be, so what will be your final accommodation benefit? 10,000 add 23062 less usage contribution paid by CLO. So, sir, will you repeat it again? Yes, I will repeat each and everything again, but your patience throughout the process will be important. So that is 30,662. Here you go. That is your accommodation benefit value, which you will put here. Okay, let's repeat it again. I want you all to listen to me very carefully. See, if cars are accepted, if CLO accept cars from JDV Limited, okay, then in that case, what will be happening? And if CLO accepts the accommodation, then what will be happening? We are calculating the income tax now. Okay, income tax implication. That is what we are doing. Salary will remain same in both of the cases. Car benefit was given in the scenario. Okay. Accommodation benefit, you calculated it yourself. Basic charge, higher of annual value and actual rent. The house is purchased, so there is no actual rent paid by employer. Additional benefit will be on the cost. There is no improvement. Market value will be ignored because gap is of less than 6 years. 1.1 million minus 75,000 into 2.25%. It's a simple formula for additional charge which you have to use. Less the usage contribution, whatever benefit is, you always reduce the usage contribution which the employee is paying to the employer. Okay. So now with this, you have the total income. There are no other incomes of this CLO. 78,000 plus 18,200. So that is 96,200. See, it's just a lengthy process. Otherwise, it's not difficult. And 78,000 plus 30,662. So this is 108,662. You have the total income. Now you will deduct the personal allowance. Okay, 12570. Okay, in this case, personal allowance will be diminished. Why it will be diminished? Because income is exceeding 100,000. Okay, see, this is very much basic at advanced taxation level. Working 3, personal allowance will be diminished as income exceeds 100,000 pounds. Okay, excess is of 108,662 minus 100,000. See, there is no qualifying donation or pension contribution. So keep it simple. It's 8662. Personal allowance will diminish by 8662 divided by 2 multiplied by 1. So that will be 4331. Remaining personal allowance will be 12570 minus 4331. Now this is just the examiner is tiring you up so that you make a mistake in the process. Okay, so the personal allowance will get diminished and now it will be 8239 pounds. Okay, that was the working three which we have done. Now comes your taxable income. 96,200 minus 12570. So that is 83,630 and 108,662 minus 8239. So that is 100,423. Okay, you have got your taxable income. Now you will calculate income tax on 37,700 pounds. It's always 20%. The basic rate band 7540 pounds. That will be same in both of the situations. Then in first situation 83630 minus 37,700 into 40%. This will be the situation number 1 for this column. 83630 minus 37,700 into 40%. So that is 18372. And in this situation, it's 100,423 minus 37,700. See, these are two different situations. 40% tax rate, 100,423 minus 37,700 into 0.4. So it is 25,089. Okay, so that gives you your total income tax 372. So that is 25,912 and here it is 32,629. Now again, one of the step which a student can miss out. Now in the question there was given income tax on salary. See, we need income tax on benefit only. The question gave you the income tax on salary. His income tax on salary was 18632. So that you will deduct from here 18632. You will deduct it from your 18632. So you will get income tax on benefit. I know that by now some of you guys must be thinking that, sir, I will leave this requirement. Obviously, that is not advisable. You are not required to go for perfection. As much as you can do in the exam, that's the important thing. 32,629 minus 18632. So here it is 13,997. Sir, will you repeat it again? Obviously, I will repeat it again. I know that it is something in which a student should get confused. Okay. Let's look at the things again one more time. Let me make it first of all presentable so that we can understand it. So this is your income tax on benefits 7280. Here you go. 7280. And here the income tax on benefit is 13997. 13997. So that will give you your total cost 7280 plus 14,000. So that is 21280 and here 13,997, 2,400 and 9,500. So here it is 25,897. So what will be the final decision? What will be the final decision? Okay. It is beneficial for Klo to accept cars as it will result in lower total financial cost. That is the reasoned conclusion or a reasoned outcome for the Klo. Sir, can you please repeat it again? Yes, I will repeat it again. Let's look at it so that you can understand in a better manner when we do a fast review of it. Okay, so now if we revise it again, see, we had to decide that which alternative was cheaper for the Klo. Now, whatever option she is taking, either she take the car or she take the house, there will be this income tax element. And that was the real component of this question, this income tax element. That was the most important thing. Okay, so that was working one. Now, if she take the cars, she will have to rent the house on her own. If she take the house, she will rent the cars. Okay, so that was the important thing that you must be clear that okay, if she's taking cars from the employer, house will be her personal cost. And if she's taking house, then cars will become her personal cost. Okay, we discussed that. Then we discussed that explanation that okay, if she's taking car, house will become her cost. If she's taking house, cars will become her cost. Then we move towards the income tax element. Now, in any case, her existing salary was important. Now, you must be thinking that, sir, why did you include the existing salary? The reason being was this thing, that due to his existing salary and accommodation benefit, when merged, his personal allowance was getting diminished. So that's why we had to go for the total working. And the question gave us a clear hint by providing us the tax on the salary. So now when the question was providing you the tax on salary, it was very much clear that you have to first reach the total tax and then deduct the tax on salary. Okay. Now doing this taxation, salary, car benefit values were given, calculating accommodation benefit, the basic charge, additional charge. I believe that these are some things which are very much easy at this level. Then personal allowance, here it was complete, here it was diminished since income was exceeding 100,000. There was no qualifying donation or things like that. So there was no need to go for adjusted net income commentary. Okay. We did the income tax, 20% till the basic rate band. Then on the excess, we go for higher rate band and we reach the total income tax. We deducted income tax on salary to get that income tax on the benefit. See, it was lengthy, but it was not difficult. It was something which could be easily done by a student if he would be going carefully. Now let's move forward. On the assumption that the acquisition of the company share option plan will not result in a tax liability. This means that it is an approved plan, there will be no income tax, and that the value of shares in JDV will increase over time. Explain the extent to which Close belief regarding the tax implications of selling the shares is correct. Now, if you go and look at it, what she was thinking. On 1st May 26, I will become a member of JDV Limited's tax advantaged company share option plan. I will be granted an option to purchase 1400 shares at the current market value of 17 pounds per share. I will exercise my options on 1st June 29. I believe that sale of shares on the same date will not give rise to chargeable gain. That belief is wrong. Even though it is an approved plan, grant date no tax, excise date no tax. But on disposal date, capital gain tax is the mandatory element. That will apply. So, now if I talk about company share option plan, very easy. Okay. Belief of Clo that sale of shares acquired under company share option plan will not result in any tax implications on sale is wrong. This belief of Clo is wrong. Okay. Even though shares acquired are under tax advantaged company share option plan, but still on disposal date capital gain tax will arise. Capital gain tax will arise. In approved share option plans on grant date and on exercise date, there is no tax if plan complies with all of the conditions, which he has stated also. If you can go and look at it, he said that on the assumption it will not result in any tax liability. Okay, when you will be getting the shares as a result of acquisition of the shares, there will be no tax liability. But when you talk about the sale, there will be capital gain tax. At the time of sale, in what is the date, you can go and look at it on 1st June 29. At the time of sale on 1st June 2029, capital gain tax will be assessed by deducting cost of the shares, which will be exercise price for CLO, which will be assessed by deducting cost of shares. Now we don't, if you can look at it in the scenario, this cost, I will be granted an option to purchase 1400 shares at a current market value of 17 pounds per share. So, which will be exercise price for CLO, which is 1400 shares multiplied by 17 pounds. I will repeat the things again also, so there is nothing to worry about. 23,800 from the disposal proceed. Now we don't know the disposal proceed, that is not given. Okay, because it is written that the value will increase, but what will be the disposal proceed exactly, we don't know. From the disposal proceed of 1st June 2029. Okay, this will give rise to chargeable gain, from which annual exemption of 3,000 pounds will be deducted. Of 3, okay, let me copy the pound sign. So of 3,000 pounds will be deducted to arrive at taxable gain. Okay, according to tax bands, it will be taxed, which will be a higher rate of tax of 20% considering existing salary of CLO. Sir, can you repeat the things again? Yes, there is no issue in it. See, CLO believes that at the time of sale also there will be no tax. That belief of CLO is wrong. The reason being is that even if it is approved share option plan, at the time of sale, there will be capital gain tax implication. The CGT implications are not waived off. Okay, at the time of sale, capital gain tax implications will be relevant. Done? Then we discussed that cost will be deducted, that is 17 pounds per share, which is clearly written here that I will purchase 1400 shares at the market value at that time of 1st May 26. So that will be our cost. We will deduct it from the disposal proceed. That value is not given, that for how much it will be sold. From the chargeable gain, we will deduct the annual exemption. You will get the taxable gain. According to the tax bands, you will tax it. And considering the close existing salary of 78,000 pounds, most probably she will be in higher rate band. So this was the 11 marks requirement, which is now done. Okay, deciding between the two alternatives, car and house. Okay, car and house thing, and then the commentary on company share option plan. Let's move forward. A 7 marks requirement and then a last 5 marks requirement. So now we are moving towards title. I want you all to listen to me carefully while we look at it. Titles, new unincorporated business. Prepare a memorandum for titles client files which addresses the following issues. Memorandum for client files. Now, this is the next thing we are moving towards. To the files from tax supervisor. Okay. Client is now title. Okay. Subject is titles unincorporated business tax issues. Okay. Date, if you remember, it was, I believe, 1st August 25. Yes. Date is 1st August 25. Done. Now, this is the part 1 which we are doing currently. Registration for the purpose of value added tax. Sir, can you repeat it again? Yes, I will repeat it again. There is no issue in it. First of all, I haven't done anything. It's worth repeating, but still for you guys. So now part 3, Tyrell's new unincorporated business. We are looking at it now. Prepare a memorandum. So here we go, memorandum. To, from, client, subject date, always the same thing we follow. Just we change the heading. Okay. Registration for the purpose of value added tax. Let's start. Okay. An easy one. When carrying out this task, you are not required to refer specific design cost or the business promotion cost. Okay. Don't think about it. You should note that Tyrell will not be accounting for VAT using flat rate scheme. Ignore the design, business promotion cost, ignore the flat rate scheme. First question, explain why it will not be compulsory for Tyrell to register for VAT, but he can choose to do so voluntarily. Such a easy question. I know, here it was written, if you remember, exhibit number 3, if you remember, Tyrell's business revenue was £60,000 and all of his sales were standard rated. It was written here. So that is below the registration threshold. So he will not be required to register for VAT. Okay. But obviously, since he is dealing in taxable supplies, so yes, he can register for it voluntarily. Explain the factors in relation to output tax and input tax, which will help understand the financial advantage or disadvantage of registering voluntarily. Once you get registered for VAT, you are able to recover your input taxes. But then when you will be making sales, you will have to charge VAT on them also. Now, if you remember the Tyrell situation, he has non-business customers who are not registered for VAT. There are small businesses. So we need to see that whether those small businesses are registered for VAT or not. Because once you get registered for VAT, you will charge VAT on your sales. Once you get registered for VAT, you will charge VAT on your sales. And if your customers are not registered for VAT, it will make the finished product expensive for them. Because if they are not registered, they will not be able to recover the VAT we are charging on them. So I believe that it's an easy one, a very easy 7 marks requirement. Let's look at it. Okay, so let's comment on the first thing first. Explain why it will not be compulsory for Tyrell to register for VAT. VAT registration will not be compulsory for Tyrell as his business annual budgeted revenue is of £60,000, if you remember, is of £60,000, which represents standard rated supplies. Okay. As sale of taxable supplies is less than mandatory registration threshold of £90,000, therefore registration will not be mandatory. Okay, registration can be done voluntarily as Tyrell is dealing in taxable supplies. Okay, if you're dealing in taxable supplies, you can go and get yourself registered. Okay, his business is of standard rated supplies. and they are part of taxable supplies. Standard rated and zero rated supplies are taxable supplies. I believe you all know this basic information. Okay. So the first question was that why it will not be compulsorily for Tyrell to register and why he can do it voluntarily. So we commented on that. Now explain the factors in relation to output tax and input tax, which will help Tyrell understand the financial advantages or disadvantages. Now, if Tyrell will get his business registered for VAT voluntarily, then from input tax perspective, he will be able to recover VAT paid on his taxable supply purchases. He will be able to recover VAT paid in relation to his taxable supply purchases. This will include VAT paid on standard rated raw materials or services purchased by the business. Okay, this will be related. This will apply for VAT payments after registration date. So he will be able to recover the VAT which he has been paying. Once you get registered for VAT, you will start recovering the VAT. Further, he will also be able to recover VAT of pre-registration period. Okay, any VAT paid on goods can be recovered of previous 4 years period if those goods were related to the business and they exist on registration date, like you haven't sold them. In relation to services, VAT paid in 6 months prior to registration can be recovered if services were related to business. See, what you need to understand is that you have very less comments and you have to cover 7 marks. So you have to discuss. So once you get registered, you start recovering your input tax. You can also recover your pre-registration input tax. Now in relation to output tax is what you charge on custom. In relation to output tax, once Tyrell will get his business registered, he will have to charge VAT on his standard rated sales, on his sales which are wholly standard rated. Okay, he will have to charge VAT on his sales, the standard rated sales which he is making. Okay, now this will make his goods expensive for non-business customers as they will not be registered for VAT and they will not be able to recover VAT charged on them by Tyrell. Okay, small businesses who are also not registered for VAT will face same issue and they may switch to other non-VAT registered businesses, registered supplier or business. However, those small businesses which are registered for VAT, will be able to recover VAT charged on them by Tyrell on sales. Okay, sir, can you repeat it again? Yes, but I believe that it was very easy. First thing was that why is not compulsorily required. He's not compulsorily required because his sales are less than 90,000. Okay, since his sales are less than 90,000, so he is not required to register compulsorily. However, he can go for voluntary registration because he is dealing in taxable supplies. Now, if we get him self-registered, he will start recovering his input VAT. And he will also be able to recover the input VAT of pre-registration period. From the perspective of output tax is what you charge on the customer and then you pay to the tax department. Input tax is what you pay to the supplier, but then you have to recover it from the tax department. See, it's very important. You guys should understand these terminologies, but it's very basic. Now, from the output tax perspective, it will have to charge VAT on its sales once it get registered. Now, those customers who are VAT registered, for them, it's okay. They don't care because they will recover the VAT. But the non-business customers or small businesses who are not registered for VAT, as stated here, they will suffer because they will not be able to recover the VAT which Tyrell is charging on them. Okay. I believe a very, very easy 7 marks requirement, a piece of cake. Now comes the last requirement, which is tax allowable expenses. Let's look at it. It's almost done. Okay. Let's read it. I can confirm that chef knives which are to be given to potential customers are not the items which are sold by Tyrell in his trade. This means that these are not samples. These are just the other gifts he is giving. Explain whether or not the product design cost and the business promotion cost will be allowable when calculating Tyrell's tax adjusted trading profit. So now we have to discuss about the promotion cost, traveling cost and everything which Tyrell was incurring. If you remember, it was written here. The product design cost and the business promotion cost which Tyrell is incurring. Let's look at it. Okay, so let's read it. Product design. I first designed the product which I am about to start manufacturing in September 2019, nearly 5 years ago. At that time, I paid a fees of £5,500 to a design company to draw up the plans, but I did not go with the production. Yes, it is an allowed expense. Pre-trading expenses up till 7 years are allowed expenses. Okay. And it will be allowed expense on the first year of the business. Your start of business is 1st December 25. Okay. So, product design cost will be an allowed expense for Tyrell from trading P&L as this outflow or as this expense was done for business purpose. Okay, it was done 5 years prior to start of business. However, still it will be allowed expense in first year of trade starting from 1st December 2025. Pre-trading expenses are allowed expenses in first year of trade if incurred within 7 years prior to start of business. Okay, so yes, it will be an allowed expense. This product design costing will be an allowed expense because these are allowed up till 7 year prior period, and here it was incurred 5 years ago. Now, let's move forward. That's something very much basic. You all know this. Business promotion. In December 25, I will travel by train to visit 6 potential retail customers in UK. Stop here. This is a simple traveling cost for the business. It's an allowed expense. I will explain my products to them. Very good. Take out for lunch. See, this is customer entertainment expense. This is customer entertainment expense. And entertainment expenses of the customer are not allowed. Okay. Now, go step by step. Traveling cost to be incurred by Tyrell in December 2025 to visit the customers and to explain product to them will be considered as a normal business expense. Okay, it is related to business. It is related to business and is not disallowed by tax department. There is no reason to disallow. It will be an allowed expense from trading P&L in the year of December 2025. In the year starting from December 2025, because it's very much logical. What he has asked you, if you remember the requirement, the chef knives are not the samples. Whether the product design cost, business promotion cost will be allowable from the trading P&L. We are just discussing them. Okay, we are going step by step. Are you getting my point? Now, then take them out for the lunch. Stop here. Okay. Lunch cost incurred on customers will not be an allowed expense. Will not be an allowed expense from trading P&L, as it will be considered as customer entertainment expense, and these are specifically disallowed by tax department. See, tax department don't allow these customer entertainment expenses because they believe that such things disturb the competition in the market, because by this way big businesses will always attract the customer because they can always spend a lot on their customers. Okay. And then the last thing which he has stated is that, and give each of them a high quality chef knife which carries a large engraving of my business logo on the plate. I estimate that the total cost of this promotional activity will be 1800 pounds. We have commented on the traveling cost, we have commented on the lunch cost. Now talking about the gift. Since this gift is not a sample, because it was clearly stated that it is not something we are selling. So for other gifts, the tax department allow gifts as an allowed expense as far as that the value of gift is less than 50 pounds per customer. Okay. Gift of knife given by gift of knife along with engraving of Tyrell's business on it to customers will be an allowed expense from trading P&L if value of the gift made to each customer is less than 50 pounds. Just a second. Is less than, I was copying the pound sign, is less than 50 pound. Let me copy the pound sign, Control C. Is less than 50 pound per customer. Okay, this value needs to be confirmed that what was the actual cost of each knife gifted along with engraving on it. Okay, so gifts to customer are allowed expense, but as far as that they are not of big value. Okay, like there is a capping of 50 pounds so that big gifts are not done to attract the customers and things like that, because tax department consider them as unfair way of doing the competition. Yes, it's done. Product design cost is a normal cost, that's allowed. Traveling cost is a normal cost, that's allowed. Customer entertainments are not allowed, like these lunches and parties. Gifts are allowed as far as that their value do not exceed 50 pounds. So if you look at this entire question, which was question number 1 of June 2025 exam attempt, I believe that on overall it wasn't difficult. This first requirement of ethics, that was a very much easy one. Then in close personal tax affairs, the residency thing, chargeable gain, very much routine things were asked. It wasn't difficult. It was just that you should be alert while doing this. Yes, this employment contract thing was a bit lengthy, but I would say that don't go for perfection. you can still score a lot of marks. Like at least 50% marks was not difficult. Okay, like everyone can go for income tax, benefit commentary, and all. Maybe you are not able to do it perfectly, but that's completely okay. Because obviously, in exam stress, you cannot do things perfect. Then the CSOP thing, that was very easy. Tyrol business, that thing was lovely, very easy. And these tax allowable expense thing. So, with this, our question number one of this exam paper is done. In the next class, we'll go for question 2, question 3, and so on. This is the complete series in which we will be discussing 7 complete attempt exam papers, then 3 mocks for you guys to attempt on your own. So this is the complete journey, which is very important in your finalization phase of exam preparation. Okay? If you have any query, feel free to contact me directly on my number, and hope to see you all in the next class. Thank you, everyone.